Okay, hello everyone again. I am going to start recording this with my other device. I'm not going to be using, the webinar platform recording, service that they have. I just been getting a lot of reports that it's this bad picture and there's a lag between the voice and the picture. So what I'm going to do from now on is that I'm going to record the live session on YouTube as well. So if you can able to make it, you can also get a crisp picture and a voice. But thank you very much for showing up today. For those of you who are here in a live session here, and for those of you who are watching later on with the recording, thank you for watching. And obviously, today what we're going to do is going to look at the market. I'm going to try to analyze the market. So I guess the biggest question is, are the market ready to bounce back up, or are we going to, is this a distribution phase where the whole market is going to roll over, right? And so if you've been following me, these videos, if you've been watching my videos, since like December and January, my view on the market has not changed. And I really think you should do your analysis in that way. I'm not saying that I know everything. I don't presume to know everything. But what I'm saying is when we're doing analysis, there's so much speculations, there's so much emotions gets involved, and there are always somewhere somebody shouting something dramatic, right? And that and this is, that's the world that we're living in. It has to be dramatic to get people's attention nowadays. Everyone seems to be seeking attention regardless of their motive. It could be they want more followers, they're more praise, whatever it is. And obviously I understand different broadcasting companies, they need to make money. But anyhow, for us though, good news is we don't have to be like that. You know what I mean? If you've been like, oh my god, this market is gonna crash, Kay, oh my goodness. And then, no, this market is going nowhere. This market always goes up. Oh my goodness, this thing is gonna roll over. No, this is bullish. Bears, bullish, bears, bullish. If you've been going back and forth, and when the market rolling over and you say, oh, this market isn't roll over, this market is too extended, this market is just, there's only so much what the government, the Fed can do, and they're going to hike the interest rate and the whole thing is going to collapse, right? And then when the market goes up, yep, this market is going nowhere. And if you're going back and forth, and if you're just swept away by that emotion, it's very, very difficult for you to really trade. Obviously, if you're a day trader, I guess then wouldn't matter too much. But as a much of a long-term trader, if you're position trading, you're more of a longer-term guy, like I am, like myself. I'm sure you guys are here because of that reason. If that's the case, if you've been like swept away by emotion like that, up and down, then really I think you should really trying to overcome that fear, overcome that emotion, because obviously what I said is, let's deal with the data when it's there. Stop dealing with the data that is not there. What's the data that we have? That's the data we have. Can this be a potential topping pattern? Yes, it can. However, do we have any kind of confirmation as of today? No, we do not. And something we've been talking about, if you've been watching my videos, if you've been following me, if you've been listening to me, is that obviously intermediate term, I've been saying the whole January, intermediate term, we're still neutral. Why? We're still holding certain levels. Okay? We're still holding certain levels. In the intermediate term, we're still neutral. Remember, I put a Fibonacci here. We're holding that first level of a Fibonacci retracement. That's what I like to call FRZ, Fibonacci retracement zone. And this is what I like to call resuscitated rising option support, because it has been compromised, and it's almost like it's coming back up now. So, we're still holding that level. We have established this uptrend, or this horizontal support level. And it looks like the 100 SMA, we're grinding all over, but the 100 SMA kind of holding under. It's interesting to note that 3 days ago we got to just right on the dot to that 200 SMA and just brought it right back up. It would have been a bit of concern if we would have closed something like this a few days ago. Well, that's not happened. That didn't happen. Remember what I kept saying is deal with the data that is there. Do not deal with the data that isn't there, right? So what's interesting to me though, you look at this pattern, you see, so what we've been talking about here last couple of days was very, very interesting, these candlestick sentiment and candlestick attitude. You can see we got that, and we got the inverted hammer, and then the next day, and then gap. You can see it wasn't a red candle, but that's still that kind of a long candle there. And then in the between, sandwich between, we have inverted hammer there, right? So we got inverted hammer, and then we had a follow through next day, and we gapped up, right? And then had a follow through. Today we're just kind of hanging in there. You can see a lot of volatility today. It looked bullish and then came back down, looked bearish, kind of went back up, and then we can see that we're respecting this resistance level. Can we roll over from this point and roll over? Yes, we can. We can. Do we have that data as of today? No. So when we are doing analysis, let's not do the analysis based upon what could possibly happen tomorrow. Though, I mean, we can forecast. I get that. I understand the fact that, with the technical analysis, we can forecast what is to come. I understand that. So this candle right there could potentially be giving us that, hey, looks like some kind of a shooting star candle, high wave doji, could even be a bearish Harami. But obviously, any other candlestick analysis needs to have a follow through, right? Needs to have follow. Just like what we talked about here at the Traders Club. That, hey, we talked about this. That, you know what? This does look like inverted hammer right here, similar to here. But I can't say, I'm pretty sure, man, this thing is going higher because we don't have the data yet. But it is a potential. It's a potential candle that could turn into minor term bullish thrust. And the next day when we had that, not intraday action, intraday very bearish, brought it back up. Then I was able to forecast, you know what? We have a pretty high probability in the minor term that we could have a run back up to about 205-ish and retest the resistance. See, I was able to forecast at that point because, hey, we did have those, little bit of that, or the signals giving us with the high probability setup. So, with that logic, can we just say that tomorrow, because of this candle, it's just going to do that? No, because we don't have the follow through. Let's say if I see something like that tomorrow, okay, and we don't have it though, I'm giving you minor term analysis, what you should look for next few days. Let's say this is what I saw. Okay, that's what I saw tomorrow, right? Then, only then, I would say, you know what? It looks like we're going to fill this gap. There's a high probability we might come back down to, retest this level, or at least to back down to, retest that level right there. But you know what else it can happen? If we hang around here too long, it can be either bull pennant or bull flag and continue higher. However, bull flag, this was a bull flag that failed to the downside. These bull flags can fail. That's the reason why, is that you need a confirmation, you need a bull flag there. It would have done something like that. That would have been a confirmation of bull flag, and then we could have continued higher. Well, that failed to the downside. You see that. So it's not that, a lot of times, people have a hard time understanding how to use technical analysis. That's what I'm trying to do, with these videos and things like that, to teach you how to use technical analysis correctly and properly, because there are so many people out there does not understand how to use them correctly. Just because we have bull flag doesn't mean it's 100% chance that it's going to continue higher. You need to look at a confirmation, and you need to understand the probabilities and things. So, I have to say, intermediate term, still we are bullish, or not bullish, neutral, for the fact that we're still holding this level. But however, we are, we are in that resistance level. So I have to say it's neutral in the intermediate term. I will turn bullish in the intermediate term once we close above that. We close above that and hold above that for a few days at least. I would have to say we're bullish on every term. Minor term, bullish, intermediate term, and minor term. There. Is it possibly forming a large bearish triangle? Large bearish triangle. Are we talking about Are we talking about this? Is this what you're talking about? Like symmetrical triangle? Okay, see that again. Let me reiterate again. That could be, yeah, we could be possibly forming. Can we say that that's bearish? It's tough to say because we these symmetrical triangles, they can break both sides, right? They can actually break both sides. I mean, there are times I think I don't know if I can find any kind of example there, but it could, but it's tough to say that it is doing that right now. If I start to see this tightening up, then for sure it is. We don't have that data as of today. We could be doing something like this. We could be. Let's say next several days, if we start doing something like that, then you might say, hey, that's some kind of a symmetrical triangle. But you see, symmetrical triangle can actually break both ways. So, I mean, yeah, that's there. That could turn into more bearish signal. It has higher probability of us, breaking to the lower side. I think slightly higher. But at that point, again, remember what I talked about in this market. In this market, initial confirmation is not enough. We need a full confirmation. So let's say if this is an event that it's gonna be a bearish triangle or bearish asymmetrical triangle, what we want to see is an initial confirmation going back up, retesting this level, and then getting rejected. That will be a full confirmation. Once we see that, then I could say that we're bearish in intermediate term. We'll come back down to about 182.50. What I'm saying is we don't have that data as of today. I am more worried about the really kind of a head and shoulder, more like a head and shoulder formation that we're forming. So, I mean, again, terminology, formality is not important in trading. There's no need of arguing, well, that's a symmetrical triangle. Well, that's a head and shoulder. It doesn't matter. They all convey similar sentiment. They all convey all the similar attitudes. So yes, head and shoulders bearish. Yes, its symmetrical triangle can be bearish, though I've seen they break to the upside. In the indices, though, they don't. They could possibly have a negative outcome though. But it's tough to say for me that that's going to be a triangle at this point. To me, it looks more like a head and shoulder that has not been confirmed. So let's say if you're looking at, so as far as a bullish action is concerned, what you want to see, I mean, there's a level the bulls need to get over is basically this level, okay? Just because we get above that level doesn't mean they're over, because we've done that in the past where we cleared above a resistance here and then we met to this horizontal resistance, pulled right back down. And so another thing is that we need to conquer that level, and then we need to get back up and hold, and then we need to hold above that level. So good there might be that, this, as of today, as far as a candlestick's concerned, that could be bearish Rami. We don't know. That could be a shooting star some sort, topping candle, topping doji, high wave doji. We don't know without the follow through. Or can it be some kind of a, like resting pattern before continuing higher? I guess we wouldn't know until as of today. We will know, probably have a better idea tomorrow. If we start to form something like that, then that will be more of a bull pennant pattern. It could break either side, but it has a little bit higher probability of breaking to the upside. Then we can possibly get up there. So what you want to see, if you really want to get bullish in this market, what I would recommend, what I would suggest for you is that, hey, wait until it closes above this level, and don't be hasty about it where you're looking at an intraday, looking at like during the day when the market is open, and then it start like pushing higher and you get all excited and you start going all in, and then like towards the end of the day you get this long tail, and then you get close with something like that. That stinks. Today, that's exactly kind of what's happened. Remember, like just 20 minutes before the market, this actually looked like this. Okay, that actually looked like that, and then towards the end of the day it came down. That kind of shenanigan happens a lot in the market. You need a close above a resistance, and that's not even enough in this volatile market where you can have a fake out where we get a close above that, and then it was giving all the hopes to buyers, and next morning we get gap down, and then we get something like this. So how do you deal with that? Well, this is how you deal with that. So you wait, and then you make sure it stay above that, and the next day make sure we stay about 206 or so. You could gap up, we could kind of hang around a little bit for first several hours or so, but make sure we stay above that. And if we can, it seems to hold in above that all throughout the day, next day after a close, after confirmation. At that point, I would have to say it's a pretty safe for a next run to at least to back up to this these resistance levels here. So there's a couple things to look for. Obviously we just talked about the bearish. We get a bearish candle tomorrow that could insinuate bearish outcome, at least for very short term, back down to this kind of a support level, or at least some of these levels. If not, then we could try to get back up here. So as of today, minor term, I would have to give, though we are back at 1020 MA and 50 MA, so it's a bit bullish looking at these moving averages and the momentum we've seen. Okay, if we don't care about what we have all of here, let's just forget about all of that. But if we just look at this last 4 days, that is a bullish momentum in a minor term, with the gap is still sustaining. Okay, that is very, very important. The buyers make sure they protect this gap if they want to have that jumping power, right? So even if we get a little bit of pullback tomorrow, what buyers want to do, make sure the bears do not fill this gap, and there's still a chance they can bring it back up with a possible bull flag. If the sellers fill this gap from that point on, bull's going to be very, very vulnerable again. It's going to come back down to some of these kind of action. Okay, so next few days important, and then if you want to go bullish, obviously we just explained where you want to look forward to. You want to make sure we stay above that. We stay above. Make sure we hold above the next few days. So minor term. It's difficult, but I would have to say, looking at last 3 days of data, I would have to give bullish to neutral. Even though we are at the resistance level, I still want to give bullish to neutral as of today. That could change tomorrow because it's a minor term. I want to give bullish to neutral because of last 3 days. Last 3 days, right? And so, obviously, intermediate term, I haven't changed my view in the intermediate term whole month of January, which means neutral. We're still neutral in the intermediate term, and primary term, nobody has to tell you. In primary term, we're still bullish. We don't have a primary term topping pattern. You might ask, hey, what is a primary term topping pattern? If you're just joining me as a new person, you haven't seen, then this is primary term topping pattern with a confirmation. We're talking this kind of scale. We need that kind of scale of topping pattern. Could take up to 6 to 10 months of cultivation, and that kind of topping pattern could bring this market down. One thing I've been saying the whole year is that this market isn't going to go straight up and just completely roll over. That this kind of move, you shouldn't be scared of this kind of move. What you're scared of is a cultivation from the bears. Many times they are going to cultivate some sort of topping pattern, something like this. That took about 8 months to build, right? And same thing with right here. This was back in 2007, something like that. That's a topping pattern, and that's how market crash, right? We get lower lows and lower highs in a primary term. Do we have a lower lows and lower highs in the primary term in the market? No, we do not. We still in the vicinity of higher low and higher high, right? So let's see what happens tomorrow. But like I just said, just look for those signals tomorrow. Let's see if the possible topping candle could be fruition for the bears, or can they become a bull panic for higher. So we wouldn't know that until I get the data. So that's all I can do as far as today is concerned. That's all the analysis I can do with the data that is available as of today. Let me go and look at some of these other ones. They're probably going to be all similar in my opinion, but looking at the NASDAQ here, you can see we have this kind of a lower highs while forming the equal lows here. So we're finding support there. I mean, this looks more like it could be descending triangle if we continue to stay this way. This pattern right here, some people say it's more of a bullish, more of a bearish, But the wider, the bigger the triangle pattern becomes, it's more difficult to forecast if it's going to break lower, higher. At that point, you just have to see where it breaks first. And also, these things love to do a fake breakout, which means we get a like breakout, and the next day we just go right back up. I mean, so you gotta watch out for that. So, but as of today, we are, pretty similar here. I would have to say this one, intermediate term, we're still, neutral, primary term bullish, minor term, bit neutral to possibly bullish, at least maybe get up here in the NASDAQ. We have a little bit of room up here, but what the buyers need to do, make sure fill this gap. So NASDAQ, a lot of work needs to be done. Not only we have to overcome this resistance right here, but it also needs to fill this gap. As soon as it gets filled, it's going to become resistance. So we need to get above that, and then we need to get above that resistance. We got 3 levels. This one, this resistance right here, that resistance, that for NASDAQ to be looking bullish for another run higher. So those are the things to look for. So as long as we're below this level, I'm guessing the volatility is going to continue. Same with the spider. As long as it's below 207-ish, the volatility is going to continue, and it's not going to be smooth at all. And best way to not be swept away by emotion in this kind of volatile market is, if you are, I'm sure all of you guys here, because you guys are not day trading, you guys are position trading or longer term swing trading, it makes you don't watch the market. Why watch the market like 10 minutes after 2-3 hours, and then okay, that's what's happening now, and then watch the market when the market is closed, and then do your analysis on a daily basis that way. Because when the market is being very, very volatile, you know what I mean? It could get you swept away by emotion. And I'll give you a good example for that is that this day right here. If you were watching this day, this was back in February 2nd. And so you see how what happened during the day. This was when during the day, this brought it all the way down. That was when I will be breaking below my this resuscitated rising uptrend support, and it will be closing below this level. I don't look at the market right at open. I usually look at the market maybe 2-3 hours later. Let's say I was watching the market in the morning. Since I am tied up with some long positions right now, if I start to see something like that happening in the morning, I'm a human being too. I'm gonna get swept away, and that's gonna concern me a lot. And then by the time I open my trading desk and trading computer, and then start watching, it was right up here. I'm like, oh, so I just saved some energy. You know what I mean? Well, if it happens, it happens. There's nothing we can do about it. There's nothing you can do to change it. You're gonna deal with it. I have to deal with it. I gotta accept it. If it happens, it happens. I'll deal with it if it happens. But what I can deal with, just shenanigans like this. But this kind of stuff, it's gonna happen. Remember what I said is that how fast the sentiment change in the market. Bearish, bullish, bearish, bullish, bearish, bullish, bearish, bullish. Very, very volatile. So save your energy, because you need energy to make right decision, not emotional decision. Not pissed off decision. You know what I mean? Not angry decision. Like you're angry at the market. I've been there. That's how I know. I'm sure you guys all been there. You want to throw your screen. You want to punch your screen. You want to scream at it. We all been there. That doesn't help, does it? So the more, emotional you get, it is more difficult to make a logical decision, reasonable decision, objective decision. So save yourself from that. Let's go. I think one of the key index I still think is the Russell. And you guys, I wrote that article. I'm not sure when, maybe end of December. I think the key for 2015 is the Russell. If the Russell do well, I think Russell is going to lead again in 2015 and 2016. Russell was always the leader back in 2012 all the way to 2014 is a leader. It was always a Russell leading the S&P 500 and the NASDAQ and other indices. It was always a Russell. And then, and after leading for so long, maybe Russell got tired. And so 2014 just kind of rested. And this is kind of what I'm talking about is today's market, initial confirmation is not enough. This is a massive topping pattern, left shoulder, double hedge, right shoulder confirmed. But remember what we talked about is that initial confirmation is not enough in this market. It needs a full confirmation. You may ask, what is full confirmation, Kay? The full confirmation would be that it gets initial confirmation by breaking below the neckline. This is what we call neckline. Any kind of topping pattern, any kind of triple top, double top, head and shoulders, triangle pattern. If it breaks that support, we call it a neckline, right? And then a lot of times what it likes to do, it goes back up, retests the neckline and gets rejected. That will be a full confirmation. In that process, what it did was it has confirmed lower highs and lower lows, and it has commenced downtrend in a primary term. But what it did do was that we had a huge fake out and then got right back up, came down, create a higher low, and create a higher high. You see that turnaround. So many times you're not going to hear this kind of analysis. I'm sure you've been looking around. It's because they're not concerned about the big picture, because most of them are short-term traders. And so there's nothing you can learn from them. So if you're wanting to look forecast longer term, you know, hold things 3 to 6 months to a year, you must understand these. You must understand the market behavior and adapt to it. S&P 500 did a lot of fake outs all throughout the year. You know, if I just do something like this, we broke the support, that's the fake out right there. We broke the support, that's the fake out there. We broke the support, that's a fake out there. You know, you broke the support right here, that's a fake out there. And so I mean, 1, 2, 3, 4. 4 times it looked like we're going to create lower low, lower high, and then shoots right back up. Lower low, lower high, and then shoots right back up. This was a very, very difficult time. I mean, for the indices where I thought that was when the Russell and the Nasdaq was also rolling over. I actually attempted to short, got burned, and then learned. That rhymed, burned and learned. And then I realized, you know what? This is the market. This is what it does. It loves to fake you out. So you know what I did? I got smart. So I went long here, and you guys remember my article, and then I was able to, capitalize from it. And so, adapting to this market is very, very important, because obviously this market is going to continue to, we human beings are pretty simple. We do things over and over again. We do that, you and I. You know, we like certain restaurant. You went to a restaurant somewhere new, and then you found it, you order something, and it was awesome, right? You like to go back there again next time and order the same thing. That's us. So when it continue to happen this way, it's going to happen continually. And nobody truly knows how until when, Kay. Well, trend is your friend. Follow your trend. Everybody talks about it. Everyone preaches it. Yet nobody truly know how to apply it. So if you say trend is your friend, follow your trend, then continue to do so, giving benefit out to the buyers in the primary term, because we continue to do higher lows and higher. There are shenanigans in between. There are ups and downs. Look at the big picture. You could say, okay, this might be the top where finally this could roll over. You might be right, but those people who've been saying that for the last so many years, it just didn't work out for them. So where was I? Oh, so Russell. So here, if I give you this, what do you see? Do you see stuff? So what I see here is here. Just look at this. We can make some sense out of that. We have kind of a wide scale of inverted head and shoulder. We have intermediate term head and shoulders, and then we got minor term inverted head and shoulders. Can you see it? Because what happens is when you're emotional, if you're shorting Russell, you would only see what you want to see, which is the bearish, the head and shoulders. If you're bullish, you would only see what you want to see, which is inverted head and shoulder. For you and I, to become master at this, you must see everything. You must analyze the situation fairly, right? To be honest with you guys, you and I, we're not fair. We're not. We're not. I mean, we're trying to be nice. We're trying to be fair, but we're not. We always think about it. When you're bartering, when you're bidding, you always wanna, you know what I mean. If you're buying something, you always wanna make sure your price is low. When you're selling something, you always wanna make sure your price is high. When was the last time you actually said, you know what? I'm gonna give you more money because it's fair that you get more money. When was the time you done that? Think about it. Somebody says he's gonna do the work for you, and you looked at the job and you think that job probably needs more, but he only bid it lower, and she's like, oh, well, that's my game, and then you give him, you know what I mean? That's us. So when you look at the market, we gotta be fair. You know, I'm trying to be better at that though. Like let's say I go to a restaurant, you know, and there's a, you know, I ate something, and then I mean, you know, I didn't go to like high-end steakhouse, but let's say I went to more of a like local, you know, family-owned steak place, and I had it. I'm like, it was amazing. It was only like $12, $13. I'm like, this is amazing steak. I mean, I've had high-end steak, but this is so. Though it was only $12, I'm like, you know what? They deserve more. So I wanted to be more fair in that, and I gave a whole lot more. I do that often. I'm trying to be better at that in life. Just want to be fair. You know what I mean? What I think they deserve, and you know, instead of just like, oh well, I wanna grab everything I can. And I think that comes to play in a market where you and we try to grab every cent from the market. Let's say everything we can get. Just every little bit of it. I want to grab everything. And then I think that's when our greed and the fear and all of that comes into place, and then just things get, you know, things get crazy. Anyway. So we have this wide scale invert head and shoulder. We've been talking about that. And then we got intermediate term head and shoulders. We've been talking about that. And what I just talked about was a minor term head and shoulder, invert head and shoulder right here. It was just hitting right there. If I just go to a line chart, you can kind of see. You see that? Do you see this? Again, this market is not going to give you perfect textbook head and shoulder. You can just look at it, oh my god, that's a beauty. It's not going to happen. You know, really, all this head and shoulder, what it is really is all about lows and highs. All he's saying is, I know I said this before, but I want to say it again for those of you possibly joining me just new or just haven't, you know, been with me a long time. Also, my dad once told me education in its origin, it means repetition. So all he's saying, invert head and shoulder, is we've been cultivating lower lows and lower highs, right? This is a lower high, lower low. That could be an inauguration of a downtrend. But when we form invert head and shoulder, we no longer put in lower low. We put in higher low and higher high. That's all it is. So if you want to understand technical analysis, instead of trying to memorize it like some kind of formula, that does not work. And so right now we still have a formation potential head and shoulders. The neckline is not yet broken though, so that's not confirmed. That's the intermediate term. And then we have this minor term head and shoulders inverted. All he's saying is, this is all he's saying. What the inverted head and shoulder is saying, hey, we have a lower high and lower low in the minor term, and so that looks possibly be a minor term downtrend. And then when we form that higher low, all it's saying is it is no longer forming lower lows and lower highs. Instead, it is forming higher high. SPY tanking after hours, I don't really look at the after hours. I've seen so many times where something tanks after hours and then next morning just boom, like it's nothing happened. So one thing I don't do is I don't look at after hours, I don't look at pre-market, I don't look at futures. So I just to let you guys know, because I don't think they do any justice. I don't think they are good information. It's just my own opinion. Especially, I mean, I don't know when last time I started looking after hours. I don't know what it was. And it tanked hard. I think it was S&P 500, like after hours, and the futures were tanking. And then next day, like it opened flat and then just got right back up. And so, yeah, I would save energy there. So, Russell, here's what I can tell you about the Russell. This is obviously the bear trap, you want to call that. can this be a bull trap and this thing can roll over? I think it's possible. I really do. Anything goes in the market, right? It's this life. It could happen. In my research, looking at just historical patterns, historical price action, I think it's very rare to see back to back fake out like that, because that was essentially the inverted head and shoulder confirmation. Initial, it wasn't full confirmation. Initial. If this thing gets up and make new highs, that's a full confirmation. I mean, and it could happen, but let's talk probabilities, right? Bear trap, a bull trap. I think it could be rare, though it could still happen. Can you show us Tesla, Amazon price, and LinkedIn, Netflix? Okay, let me put those in here. Amazon. I'm not gonna do it right now, but I'll put them in the list. What else? LinkedIn. Oh, we might be here. What else did you say? And Netflix. Yeah, I'll look at it after I'm done with analyzing the market here. So Russell intermediate term, what is it? I haven't changed my view on the Russell for a whole month. Intermediate to neutral, because we're still, I would have to say we're still kind of holding this level. Head and shoulder was never confirmed, and in today's market, even confirmation is not enough in these initial confirmation and full confirmation. But right now we're just right here, Do you know what's gonna happen? Here, watch. Russell could give you early signal where the spider's going. So tomorrow, I mean, we have a little bit of a topping candle there, but that candle is a bit small compared to the day before. It's not like this huge candle. You see right here? You see this guy right there? Here, let me go like this. You wanna trade this market. You have to understand how to analyze the minor term, how to analyze intermediate term, and you want to understand how to analyze primary term. So right now I'm analyzing the minor term. So obviously this little tiny candle, obviously it was at the resistance. A little bit of doji, but that candle is tiny compared to that guy, which means this guy is still in control. Probability wise, could they bring it down like this next day? Yes, it could have. But then next day, you can see we had to follow through. Though that was a bit of one of those kind of fake breakout thing happen. I was actually gonna go long there, but I know already what it needs to do next day. It must hold above 180.64. So I remember telling to the club members, hey, I want to go long here. I'm currently already long on Russell, but I want to add to this position, but we gotta make sure because there's still too many break or fake outs. I want to make sure we hold above 180.83-ish next day, at least 2-3 hours. Boom. We didn't hold on till we gotten below that, but still look pretty promising. So we said next day, I want to make sure we get above 180.80-ish. Next day, we did get above that, but we weren't able to hold through it, and then tanked, so then we didn't go long. So same applies here. What you want to see is you want this thing to stay above, close above. Okay, we already seen the fake out here, right here. You go to line chart, you know why I drew like that, because you could be drawing, well, that's the resistance. No, you go to line chart, okay, like there. So this candle we just talked about, this guy is a similar guy right here, this guy and that guy. So we could still have a red candle tomorrow. Let's talk about probability though. I do think looking at this guy and that guy, we might have at least one more day, possibly even something like that tomorrow. Possibly. I mean, we'll have to see. And if we and then we close above that, well above, make sure we stay at 119. Make sure we stay above 119. No fake out. And we stay above it for a day or two, then I think we're ready for the Russell to continue higher, and I think could possibly lead S&P 500 and other indices as well. And then once we clear this level and hold above it, then I think we're gonna have a great year. A great year. Really believe that. Great year. So, so yeah, I mean, I'm not gonna look at other indices. We'll look at Spider, Nasdaq, and Russell. I think Russell is the key. Looking at these indices, I think we're still, I would have to say, bit more bullish in the minor term, even though we are hanging on the resistance level because of the last 3 days of momentum that we have. And so, but there are resistance level there, so we have to watch that. And then the intermediate term, neutral for the fact that we're still holding certain levels. I think it could become bullish once we get above certain levels that we talked about on S&P 500 and on the Russell. Primary term, obviously bullish. So we're very, very close. The buyers are very, very close to really turn this thing around. Spider that just needs to get it. Just we're not that far, but that could be that right there. That's not that far, but that could be that little more. They might not have it, and things could change very, very quickly. But let's not carry it away. Let's wait for the data next few days or even next week, and then we'll go from there. Once we get above that and stay above it, then I think that all the indices can continue higher, and things will be looking good for the buyers at that time. Any questions, on the indices or anything that you think I missed or you want me to look at, go ahead and let me know before I get into these individual equities. No questions, huh? Wow, we have a record of how many people are in here. Most people usually watch through the recording, so appreciate that. All right, so let's go through. So I'll look at Apple, Tesla, Amazon, Priceline, LinkedIn, and Netflix. Apple, obviously, you guys know that I am still in this. Let me remove some of these. Oh, that was very laggy there, but let's see. I'm just gonna. Oh, nope. Okay. So if you've been following my blog, we're still holding our positions on this. Apple looking really good. I really like when any stock, doesn't matter if it's Apple or Google or Treasury bond or Spider. I really like when we have here. This is a good example. Here, who asked about the symmetrical triangle? This is what I'm talking about. This is a market where we'll get a triangle. I was looking for example to explain. And then we get a confirmation, which is initial, not a full confirmation, initial confirmation. We're going back to Spider right now. I just found the example here. And then we needed to retest the neckline and gets rejected. So what I'm saying is, even with the triangle we might be forming on NASDAQ and the Spider, this is a much bigger scale than this, and it could break lower a day or two, and then it goes back up, and then it just do shenanigans like that. This is the market we're dealing with today. This is the market. It doesn't play out. It loves to do a fake out. This market loves to do a fake out, loves to trap everybody. And then once you short this, and you get burned by not, get burned from this, and then now you're either fearful or angry, so then you think that, well, it's still gonna, you might have another fake out, and then you miss the whole move. You see, this is the market we're talking about. So even with these triangle patterns, gotta be careful there. Initial confirmation is not enough in today's environment. That was the initial confirmation. Full confirmation was needed. The neckline testing and the rejection was needed and didn't have that. And then when a lot of times when that just goes straight up. What I like as far as a technical term, technical form is concerned, I love when we have this well-defined, well-formed, took a while to cultivate, well-established higher low. I don't like this V-shape higher, because a lot of times these V-shaped moves are not sustainable. You can get a great move out of it, but once it starts to pull back, it could be difficult to find the place to add and things like that. And that's kind of what we saw in Spider. We went straight up and then volatility, because after the V shape. But if I just go back to and look at Treasury bond and how I was able to ride this thing all the way, is because this is where it all started, guys. Right here. What I like the most about it is we had this double bottom with the weekly bullish divergence. If you've been following my analysis, you know why I went long. And then we cultivated this right here. It took about a month, 2 months, to cultivate that higher low. I love this kind of higher low rather than the V shape because they are more solid. And then after that, it's gonna have its shenanigans in between, but look at how well it trend. Higher high, higher low, higher high, higher low, higher high, higher low. Follow your, trend is your friend. Follow your trend. That's exactly what I did. But remember, what all started after this well-formed stuff. So I like that pattern a lot. I like it when they spend time to cultivate it like this rather than just like V-shaping higher. So I really I really like this higher low here. It took about close to 2 months. Very similar to Treasury bond. Close to 2 months. I really like that earnings, good earnings, and then continue. It's gonna have a shenanigan. Do I care about daily move? No, I don't care about daily move. It's gonna do what it's gonna do. I mean, right now it's starting to look a little bit concerning. I'll tell you what, if market continues higher, I think Apple is going to continue higher. If market comes down tomorrow, it's going to come down. But that's just minor term up and downs. Intermediate term, we're still bullish intermediate term, right? Because we have it could be some kind of rising wedge. And on my yesterday's update on Apple, I talked about a pennant pattern, but with today's that wick that we have, it's starting to look more rising wedge, which isn't. You see how that little information just changed the sentiment of minor term? It looked bull pennant and then now it looks like bearish wedge, rising wedge. I don't care though, because it could come down and then worst case scenario, it could come back down to retest this neckline and then go, and it could have. And you know what though? This is one thing that a lot of people don't understand. They only want Apple to go higher. What you want to know, you want a solid trend. You want Apple to pull back and start to create higher lows. It actually makes much more solid uptrend in that way. Worst case scenario, I think it could come back down to this 10 EMA, and then if we see bearish move tomorrow, bearish candle tomorrow, or it could be coming there. The worst case scenario will be it will fill this gap, come to 50 EMA, and then that will be a worst case scenario. Make sure we gotta stay above that though. If we get below this level, then that's just not good. And I think only way that's gonna happen is that if the only way the Apple is gonna come all the way down here or even below that is if the whole market starts to see like 3-4 days of like very abrupt sell-off. That's the only way I can see like these investors are just gonna shaken out and start just closing their positions. If not, if there's some signal that the market is holding, then I think Apple could have pullbacks and stuff. It will come back maybe down a little bit and then it will continue. So Apple looks good in my opinion. Looking at like my like my weekly, monthly, other screens, I don't think it's overbought. We still have room to move. Let's see. So I mean, this is ADX. You can see ADX is we're just bottom here down here. That's a great sign, which means there's a lot of you know what I'm saying. Apple has a lot of room. It if it does move higher, there is a lot of strength that it can move, and many is thanks to this pattern. Thanks to that pattern, this pattern made it available while we're forming this. Bulls were able to fully rest. So you see that last time we got it. I mean, usually it'll come to about 670. Usually, usually Apple will come about 60, 70. So that's the level you want to watch. And so, minor term bullish, intermediate term bullish, primary term bullish. We got certain insinuation potentially be bearish, but as of today, with the data at hand, this hasn't confirmed yet. So I still have to give bullish signal on bullish on the minor term, because we haven't seen this yet as of today. That can change tomorrow though. Okay, I'm still targeting around 130-ish or so, 130-ish or so as a next target. I'll give you kind of a quick, trick to how to set your target. So when we have so when we're looking at here, so this was my target, and I'll tell you how I got that target. So when we are looking at this lows and highs, you can see we had that pullback, and then we pulled up higher. And when we came down, you can see this low is still higher low than that. So we're still in an uptrend. This is a good sign. So what you do is first you put a Fibonacci like this, and then you're gonna get your Fibonacci expansion 138.2% or 161.8%. And then what you do is you do your wave analysis. I'm not talking about Elliott wave. I'm talking more about A, B, C, D analysis. So we got A and B here. And then what you want to do is you want to push, you want to make this duplicate, and then you want to come down to the next low. So low, higher low. And when you put it up, it's gonna coincide either that line or that line. Many times it's usually 161.8%. Many times, but sometimes it could be lining up to. You can see how exactly came down to 138.2%. Doesn't always happen. You know what I mean. It could come down a little bit lower, higher, but as long as in that vicinity. But once you start doing this kind of targeting analysis for next wave target analysis, usually it likes to come to about 161.8%. This one came to 130.2%, and it's perfectly coinciding, which means that's the important level. Doesn't mean that we're going to be completely fixed in that and just no matter what happens we'll just wait for here. No, we got to do your analysis to make sure it could come maybe here and then roll over. I mean, I don't think it's going to completely roll over, but I mean, it's going to have higher lows and higher highs. But that's at least you know where you're heading, and as long as it's healthy move, continue to have a healthy bullish move, you can hold on to your position until there, close some positions there, wait for a pullback, add some more, and then you continue to ride that trend. And that's how I actively position trade. So let's. What time is it? Oh my goodness. Okay, so let me go through these quickly here, and again, let me know if you have any questions as I go through them. Tesla. Let's look at this. We have lower highs, lower lows, right? And this is still a lower high as of today. If you went long here and then you rolled this, that's great. That's not my setup, because we're still in a primary term. I'm talking. This will be primary term. I'm talking this term, we can call it in primary to intermediate term. Technically, we are still in the vicinity of a higher low in the massive primary term, but we have downtrend here. So, and we have these moving averages crossing. So I won't be going long. We do have a bullish divergence here on MACD. If you just look at your MACD, you will see this is a lower low. MACD will be doing something like that, the higher low. So we have that. That's could be a good signal in the intermediate and minor term. I still don't want to go long here. Still, in my opinion, it's still bearish in the intermediate term, possibly primary term. I'm talking primary term is this right here. Uh, what would get me excited would be to go long would be something like this, either here or wait for a full confirmation here, right? And you look at it and say, well, that's not attract. This is not attractive, K. This is attractive. Right, you see that's what I'm saying is that's what everybody want to do is go long at the bottom, but you see it's very difficult endeavor because trend is still down. How can you just I mean, if you get lucky, that's great, but what we need is a trend reversing. What is the definition of downtrend? Lower lows and lower highs. We still in a downtrend. We need to nullify the downtrend, and we need to see something happening, at least a higher low and higher high. And that's still very attractive because after this thing reverses, I'm guessing it's gonna go it's gonna go have a pretty good move. So until then, I'm gonna be out of it. I'm not gonna touch this, but I am watching this. But I'm probably not gonna go long for a while until I see some kind of establishment of potentially inverted head and shoulder, at least higher low and higher high. I need to see something like that. So it's still bearish to me. Minor term looks bullish because of momentum that we saw here last few weeks. So it looks bullish in a minor term, bearish in intermediate term, bearish in a primary term looking at this. So that's not interesting. Let's go to Amazon here. So Amazon, that's what I'm talking about is lower highs. Though we didn't have a lower lows, we started forming equal lows. And what happened? We now clearing all these lows, lower highs. So now these lower highs are starting to be dismissed, right? But what are we missing? We're missing one big higher low. That's what we're missing. We still don't have a higher low. I mean, we got a little bit like that, but what I want to see, because you see Amazon, if you just study Amazon, you just look at the chart pattern here. Does it go straight up? No. So do you really want to go long here? Unless you're day trading or maybe you want to get a quick turnaround tomorrow, but I mean, even in the good earnings time, I mean, this looks like earnings right there. I mean, do you really want to go long after that? It looks like that was earning. You see, we had a good move there, and then we pull back. What's important is here. This is how you can learn, guys, is that instead of trying to learn the market in an everyday basis, because it moves so slow on a daily basis, go back to your charts and study them, because they're going to move similar way. Lower highs, lower lows. What it started to change, didn't it? Higher highs, higher lows. That looks like earnings, and we thrust, and we got above that. Suckers chase this. That's suckers game. You and I, not sucker. We're smarter than that. We say, no, I'm gonna wait for a pullback to create a higher low, because we already been having higher low, we got higher high. But let's say if this just kept going higher, let it go. It's not the end of the world. Let it go. Who cares? Gosh, And then once we start to get above the 1020 MA, this could be your entry, your stop right here. And then you see that you never got stopped out. You could have closed your position. Great position trading right there. So let's go back. You want to go long here? No. Wait for a pullback. I'm watching this. I might go long on this. I'm watching this level right here. Pull back, wait for a bounce, wait for 10 EMA to assist, and once you start to see a good bounce, go long, stop somewhere here, and ride it. But do not go long here. Can this thing just go, and it just keeps on going? This never happened in the history of Amazon. Yes, that can happen, but why don't you go buy a lottery then? That's the same concept. Like, you really want to, you know what I'm saying? You really want to put your money where you think that it's going to happen, that it never happened before. I'm pretty sure we're going to have a pullback. I might be wrong, though. If it doesn't go pullback, I'm fine with let it go. Let it go. But watch Amazon. Wait for the next higher low. I'm guessing some of these levels. And then we get above that. We get higher low. If you really want to sure, like you want to make sure, wait until we close above that. It's still not too late to go long here. But you're gonna risk a little bit more because your stop still has to be down here because of that's the lower higher low. You could pull back and then go like that. All right, so Amazon I'm watching. It's in my watch list to go long for position trading. It's no longer in a downtrend, so that's what I'm talking about. Tesla. Tesla is not like Amazon right now. Though we have ER coming up on Tesla, so if we ER good result, we get a huge gap up, then maybe things could change. But you know what, I told you how to play that. I know price lines are completely out of my radar. I don't even watch this. You know why? Because we're in a downtrend. Lower highs, lower lows. Yeah, there, and so we got downtrend there. It's still in a downtrend. So this is not a good setup there. And you could be possibly thinking, well, that's a double bottom, K. Yep, that's a double bottom. If we get confirmed, you could potentially have your target right here. So you got that move. See, that doesn't excite me, that kind of move. So I mean, if you look at a chart like this could be your homework. When you go look around this chart, you tell yourself, what data should I wait for before I ended up going long? And you start doing these things. Okay, so you start analyzing. Okay, so we're lower highs, lower lows. So what would it do for it to stop, cultivating low lows and lower highs and start making higher lows? So what you do is, okay, so this is kind of a resistance level here, and this is another resistance right here. And we got this resistance. So you can really break it down. We got low here, low there, low there. So what you want to see is this thing going up and potentially making equal lows. And then waiting for a pullback. But this time, I don't want to go long here because we still have the low here. What I need is this thing needs to confirm this breaking above this low and making higher high. Higher high, higher high, higher low. So this is probably the good area to go long. And you'd be like, okay, I could go long here and then, go for all of that. But how do you know that you're gonna have that? It could continue to downtrend like this. So no. You wanna short? I don't want to short anything in the bullish. Well, we're still bullish market in intermediate and primary terms. So I would not be interested in the LinkedIn. Okay, so we're gonna talk LinkedIn and Netflix, and we'll call it a night. I'm starting to get tired here a little bit. So you can look at this as can this be some kind of rising wedge triangle? Looks more like a rising wedge, which is a bearish signal. But remember what we talked about in today's was this? I don't know if that looks similar. See, I mean, in today's I'm trying to find an example here, but I can't really find it. I mean, we get head and shoulders, we get confirmation, and then we do stuff like that. I mean, that's so before we go bearish because of that, because obviously we don't have full data to see that what we need to look at is first we have higher lows, and we kind of doing resistance there. So it's still, in my opinion, that's still bullish. We're still in a higher lows. We're still kind of in a higher high territory though. We're still kind of equal lows. So I mean, I think in the intermediate term bullish, primary term bullish, but I think maybe what we need is we need to get above this level. But I think it's waiting for the market. If the market gets above those levels I talked about on S&P 500 and Russell, I believe that LinkedIn can get back up here. But LinkedIn, actually, I like this kind of a wide scale of inverted head and shoulders that we have. Left shoulder head, right shoulder, kind of a wide scale of that. So that's something to keep in mind. And you could also look at this. I don't know if it's high. I don't know if that's a head and shoulder. More of a resistance here, right here. And so we're just hanging in here. We gotta close above that. But I still think that LinkedIn is actually bullish because of higher lows and higher highs. And let me see here. Yeah, so that's a pretty good dip, and then we kind of formed this kind of a big higher low. That's kind of a primary term higher low. So I mean, if we can get above that, at least we'll get another here, and then I think we could possibly make new highs. So I think as long as the market do well, I think LinkedIn would always also do well. So still looking bullish to me on LinkedIn there. Lastly, Netflix. We'll look at Netflix and we'll call it a night. Thank you very much, everyone staying here. And now that I am recording this with my device, you would have a much clearer picture on YouTube. Oh, not a problem. Not a problem there. So Netflix. So Netflix. I've been watching this, and it's a bit of a kind of funny looking thing happening right now. It's like we got this gigantic. Again, is that head and shoulder? We don't have the data to confirm that, because that head and shoulder to be confirmed, we need this thing to come down here. And remember what we talked about. This is an environment that initial confirmation is not enough. We need a full confirmation. So I mean, that's a long way to say that's head and shoulders. But I tell you what, if you feel iffy about something, like if you feel like, well, that's kind of iffy to me, Kay. I mean, we had an equal lows here, and yeah, that's probably not gonna. It could be head and shoulder. We wouldn't know until here. If you feel iffy about it, just let it go. Because I kind of thought about going long at after the ER, because we cleared this low. But I'm thinking, because I like to get in position that I can see myself holding at least 3 to 6 months. I really looked at it as like, maybe a swing trade, like a week or so. So it didn't really get me to go long, but it's still on my watch list. What would get me interested is if we start to form some kind of higher lows and higher highs in the intermediate term. That's higher low, not really. We need intermediate term higher low. That will be higher low. Low, higher low, higher high. But even then, I don't want to go long here. I would probably want to wait till we clear above some of those levels, and then stop somewhere there, and then possibly continue higher. But is it iffy to you? I mean, again, I'm not gonna say that's head and shoulder, but I just feel a little bit like, yeah, there's other setups that I can go long, so I'm just gonna not do that. But bullish. It's bullish minor term, bullish intermediate term, bullish primary term. Obviously, we're above 10 EMA, we're above all the moving averages. We're bullish in all terms, with a little iffiness. That's a little iffiness with it, but I don't know if that's a word, iffiness. So that's kind of what I'm getting at with this, and I'm not interested on Netflix right now because of that. So the chart pattern is the way it's like that. So, all right. So that concludes today's session. I appreciate you guys coming out. You guys have any last questions? I will go ahead and close this session. Thank you very much, everyone staying. Wow, you guys all stayed, and hopefully these sessions are helpful to you. You are very welcome, everyone. And again, this is a work, and don't expect to master this overnight. Give yourself some time. If you're just trading, just understanding technical analysis, give your time at least, just gonna be honest with you, a minimum 3 to 5 years if you truly want to understand. And you could think that, well, I'm different, okay? I can get this in a year, and maybe so. There might be something. I'm sure you guys are much brighter than I, but it took me that long to fully understand the charts and controlling the emotion and following the trend. And also, it's not enough to just analyze a market like that. Do you know though, The easiest thing that I always say is easiest thing to do what I can do is writing an article together or doing these videos and analyzing. The hardest part in trading is where would you go long, where would you place your stop at, how much your position size, if you're trading option, what expiration date, in the money, out the money, at the money, where's your target, how much would you close out when you get to your target, when would you add, how long would you hold, why do all of that. See, that's the most important part that you need to cultivate in your trading next 3 to 5 years. It's not enough to you master about everything about candlesticks and chart patterns and moving averages and all of that, lows and highs. If you master all of that, yet you're emotional and you just can't hold through anything, then all the stuff you ever learned, it goes out the window. It doesn't do anything. So I guess I'll just say that much. Have a great night, and we'll talk next week, right? Next Wednesday, I'll put out the video and see what happens to the market, right? Next few days, it'll be interesting. Have a good night, guys. We'll talk soon.